Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who will soon be on. Soon be on, soon be on. This is not going to be as long a live stream as like yesterday or last couple days, just because I am very, very busy. But we're going to get Bob's thoughts. Good afternoon, Patrick. If we have time, we'll check out NIO Royal Palms. Hey, Daniel. Good afternoon, Donald. Evening, Charles. Hello, George. Daniel's new favorite saying about the S&P, you can wash a pig, but it's still a pig. But does it make bacon? That's what I want to know. Good afternoon, Jacob. Good news is good news, and bad news is good news, so PCE doesn't matter. Markets is going up, and nothing can stop it. Well, nothing can stop it is not very good grammatics by you. So work on your grammatics. Greetings, Ted. Bill and Ted's most excellent adventure. So maybe it's going to be Bob and Ted's most excellent adventure. What's going on? Soon to be Bob, Ed. Everything's going. Hey, Mike. Zany toppy pattern? Yeah, zany toppy? I don't know what a zany toppy pattern is. Oh, where are we? What happened to my stuff? Oh. It shrunk away. It shrunk away. Let's just, by the way, I'll just start in reverse order. We had Intel, which was a miss. Looks like it's going to trigger that double, so we can look for the bigger pullback in Intel. Visa was a beat, and a gap up. That's what was on deck for that. I am going to just review today. Again, we talked about jobless claims. We'll get Bob's take on initial continuing jobless claims, on GDP from fourth quarter, and anything else. Kansas City Fed, composite and manufacturing coming in better than forecast, but still in contraction. And we'll get Bob. Coco thinks core PC and PCE doesn't matter because stocks are going to the moon. But we'll get Bob's take on that, and then we have consumer sentiment tomorrow, and then the week is over. Real quick, one more time. Tomorrow we got Chevron, Exxon, moving on up. Who said it looked like it was rolling over? Moving on up. American Express, again, going to take that, see how they're budgeting for loss provisions. Colgate Palmolive, from a consumer staple with inflation aspect and how they're expecting to pass that along, continuing. So that's the biggie. HCA Healthcare isn't minor, though. So you still got some stuff before the open tomorrow. My main one I'm going to be looking at is Chevron. Also pretty strong. Besides healthcare, pretty strong. Market map, you see Exxon up 4%, Chevron up 4.86 ahead of Chevron earnings tomorrow. All your mega caps up big, Tesla up close to 11%. Energy leading the way, then consumer cyclical, then comm services, then technology. Fed watch still at that 98% for the 25 basis points, climbing up closer and closer to extreme greed mode. And with extreme greed mode, I think we'll bring on Bob.
What's up, guys?
We're getting close to extreme greed again.
That's what I hear.
Wow, isn't that impressive?
By the way, pigs don't make bacon, Mike. They are bacon.
Is that before or after you put them in the oven?
Well, I don't actually oven.
They're bacon then. If you put them in the oven, they're really bacon.
We used to oven our bacon, but now we flat top grill it, as I've shown you pictures of.
Yes, which was quite impressive, and looking very healthy.
Yeah, so, I mean, ish, sure.
Well, look, I could be either big or
it doesn't take that much oil to cook stuff on there, so you can throw a ton of vegetables and a ton of beef on there, a ton of chicken, whatever you want to cook, fish, and it's like just a tiny bit of oil. The grill kind of becomes nonstick, and to be honest, like I got so sick of the Teflon coatings and being careful not to scratch them. I got the stainless steel clanking going on. I can scrape stuff as much as I want. It doesn't matter. It's beautiful.
Hey, Christo. Charles says, hi, Bob. Sterling,
what's up, Charles?
Disappointment. Intel's got some still restructuring to do, but not from a stock perspective. I actually like it when it pulls back. So, good point. They aren't a bacon until you cure them. But you only have to cure them if they were sick. Oh
No,
boy, it's gonna be a long live stream.
but it's not going to be a long one for me. As a matter of fact, I'm considering, and I haven't decided on this yet. I'll rely on you guys. There are occasionally, maybe Tuesdays and Thursdays, I can't show up anymore. I'm thinking of switching permanently to mornings. You guys let me know if that's a problem. If it's a problem, then I'll do my best to stay on the afternoons. But given the time change and some of the stuff I have going on in the afternoon, the mornings might be better as a consistent show up. But I'll talk to Mike about it offline too.
Well, we
It's
might
not,
have to start then earlier on those mornings
it's
because
not going to
we
be this week.
we can't. No, but in general, so maybe one morning, one afternoon could be better.
That could be better.
You know,
Also, I wouldn't mind coming on before the open, before the numbers,
well,
but
we could always
we'll talk.
arrange that. All right.
Well,
Well, speaking of numbers, first, before we
yeah.
get to the numbers for tomorrow, any take on the numbers today? We had
So, yeah, GDP was strong, and it kind of look if the CME Fed watch tool wasn't so pinned to the high 90s, I would think that tomorrow's decision might be actually slightly flexible. I've told you guys before, I've never seen it above like 95 or higher where that wasn't the actual move. Doesn't mean it can't happen. I saw an analyst from Goldman say that if the Fed wanted to really send a message that the market is misbehaving, they could do 50 on Wednesday and really just shock the hell out of the market. But they're not likely to do that. They would be putting themselves in such a trick bag if they did that. And then the recession came, which I still think is coming, is then everybody would be like it was that last 50 that caused the recession, which of course is ridiculous. So I think that today's GDP data was pretty interesting, especially when you looked at the price components heading back up. When you looked at some of the price indexes in there, they were heading back up. So we'll see. I don't think it's enough to change what the Fed is doing. I would pay. This is a broken record, but I'd pay very close attention to the statement and the press conference. More so the statement right now, believe it or not. Normally, I say more so the press conference, but the statement is going to be more what the Fed was thinking prior to today's data, prior to tomorrow morning's data. The first time ever, and probably the last time, I agree with Coco, I don't think that PCE matters as much tomorrow because we're likely to see a little bit of a dip. And the question becomes, as I mentioned this on the last live stream, when you look at crude oil, you look at copper, you look at soybeans, commodities are creeping back up as services does not fall. Services inflation does not fall. The only place you're getting some relief, and you're getting a ton of relief, is natural gas. Natural gas is going to be down what? I think 7 weeks in a row and 8 of 9 weeks, something to that extent. We're at the lowest levels since April 2021 on the CME natural gas prices. So, but prior to the move of the last couple of days, people were still paying more for natural gas than in any year besides any January besides last January, going all the way back to 2014. So prices were still up. Now, we also saw some positive home numbers. I suspect that's what I talked to you guys about a couple of weeks ago when I said that there's people like the person that I know who can kind of come in and buy the first dip in homes, right? You got home prices that have dipped and you've got some defaults for new home builders, and there's people that could come in and buy those. And that, as you might think, Mike, when you start to see price falling below the rotation zone or through a channel, sometimes you get a retest of that channel where things stabilize back up before their next collapse down, right? I think that's probably what's happening to home prices. But I will also say with today's data, you look at jobless claims, 168,000 or 186? I don't remember.
180. It was 180 something.
186. That's a low number.
Yeah, initial
I
jobless claims 186.
will also point out one thing, and Mike, I'm going to say this and then I will find it and send it to you. Jobless claims, here it is. Uh, can I email this to you, Mike? It'd be easier if I emailed it to you.
Okay, sure.
Or is that harder for you to do? I can email it to
No,
myself,
no,
text
I
it.
can do it.
Okay.
You know.
Jobless claims tends to trough just before or during a recession, during a slowdown. So it's a weird kind of a dynamic. I'll send you the chart, Mike. It's coming to your email right now. This is something I saw the other day and I saved for this particular live stream. Mike, I sent it with no subject. It should be there in a few minutes. So jobless claims continues to fall, yet we continue to see layoffs, some of it leaking out of tech into other industries. Um, it's This rally doesn't dissuade me at all. You've got higher lows, but you've still got lower highs in the S&P on the weekly. And so it doesn't dissuade me at all. I'm going to wait for this chart to get put up.
My head's just spinning because I've seen stuff with now even today with the fourth quarter stuff out. The recession was last first and second quarter. The recession ended last year, and so it's all clear sailing ahead. It ended. It's already over, Bob.
It's already over. I don't think it's here yet, quite frankly.
No, people said it's already over.
Look, consumers' savings are hitting record lows now. Consumer debt is hitting record highs. So there it is. Initial unemployment insurance claims have troughed between 6 and 20 months prior to a recession coming. Okay, prior to it coming. So 6 months would be third or fourth quarter of this year, which is when I think it's coming. Doesn't mean that I think the equity fall is coming before that. And then, as Mike has mentioned, time and time again, equities can rally through a recession depending on what's happening with inflation. And because we see deflation starting to take hold, not disinflation, we see deflation starting to take hold, it could be possible that we have just a run-of-the-mill recession as opposed to solid and sustained stagflation. We'll see. Still a lot of data to go, and I'm data dependent.
That just means you're hedging your bets, Bob. Data dependent.
Yeah, I'm taking both sides.
Okay. My head's just. By the way, when is it that long ago? But we had the Bank of Canada, raise and then say that they're pausing, and then any thoughts on that? And then my stuff lit up with everybody saying, "See, the Fed's now going to pause. They're going to follow Bank of Canada next and pause. They're only doing one more."
Hey, look, they might, but they're going to have to explain why they predicted the 5% terminal rate and didn't get there. They're going to have to explain that. That's number one. Number two, the Bank of Canada kind of led. Okay, they kind of led in terms of the aggressive rate hikes. The U.S. central bank definitely exceeded the levels that the Bank of Canada went to. But man, when you look at the rate hikes, March 17th, 25 basis points. March 5th, 50 basis points. June 16th, 75. July 27th, 75. September 21st, 75. November 2nd, 75. December 14th, 50. Do we actually believe, well, let me rephrase that. I don't actually believe that they would be that aggressive and then just spin it. Just be like, job well done, guys. All right, let's start cutting back to 3.5%. Let's start cutting back to 3%. Just very unlikely to happen. So we'll see. Could happen. Could definitely happen.
And Bank of Canada said they're going to pause, and if inflation starts kicking back up, they're willing to start the hike cycle. That's different than what our Fed has said. Our Fed said they don't want to stop and start.
Right.
So they said, I think our Fed's going to go to the fact that we'll keep going. And then we're going to pause and leave an extended period of time. Now, that length of that pause could definitely change. But
Right.
Canada said we're going to pause it and we might start it up again in a couple months or a couple
Yeah,
meetings.
they said they're going to watch, monitor what the rate hikes do to the economy. So
Oh, I'm so tired. Oh, yeah, the Hasbro layoffs and everything. What else do we have? Hello, Options 22. Hey, Coco, the market will end up rallying. So from January, the opening price is going to be up, or are we going to have rallies of 20%? Oh, I mean, we can easily
no,
have rallies.
just Mikey, just leave Coco. He's
He's,
just spinning. He's spinning in a circle right now, like he usually does.
but stocks always go up. Paul, what? I'm so sick of these questions. Sorry, it's just driving me crazy.
Right.
Everybody, you can trade what you want. The probabilities say the lows aren't in. Bob, are the lows in?
All right. So is that Paul saying I have to ask again based on what I
Yes.
said about recession?
Again,
So
yes. Again, it's
that's
like
okay.
every.
Listen. I mean, I know you do more live streams than me, but Paul's a good guy, and I want to clarify something, Paul. The last time you asked me this question, you said since you said a recession is not happening. I didn't say that last time, and I didn't again say it this time. Okay, but having said that, all right, I'm going to read you. I don't know if you were here, but I think if you, Mike, if you'll bear with me 1 second, I'm just going to read this whole thing. Okay. And it's basically notes that I wrote for an Australian TV appearance that I made. What do they call it? AusBiz, I guess. Just bear with me, Mike. I'm going to read the whole thing. I currently do not believe we have started a new bull market for these reasons. Number one, earnings. The fourth quarter earnings season for the S&P 500 is not off to a strong start. The numbers and magnitude of positive earnings surprises reported by the S&P 500 companies are below their 5 and 10-year averages. So that means the surprises, the positive surprises, and the amount that the positive surprise exceeded the estimates by is below the 5 and 10-year average. Okay, Paul? Overall, the index is reporting a year-over-year decline in earnings for the first time since the third quarter of 2020. The blended net profit margin for the S&P 500 for the fourth quarter of 2022 is 11.4%, which is below the previous quarter's net profit margin of 11.9% and below the year-ago net profit margin of 12.4%. If 11.4 is the actual net profit margin for the quarter, it will mark the sixth straight quarter in which net profit margins for the index has declined quarter over quarter. 6 straight quarters, Paul. It will also mark the lowest net profit margin reported by the index since the fourth quarter of 2020, which was 10.9%. Then I wrote in here, now that was all from FactSet. Then I wrote, quoting me, I think it goes lower before this is all over. So that's the part I wanted to read you, Paul. The second part is the economy is not the stock market. Okay. But having said that, if I believe a recession is coming, okay, then I believe at some point stocks are going to go lower because a recession will hurt profit margins even more than they've already been hurt, right? Because during recessions, people don't spend, right? So I believe a recession is coming. So if profit margins are already bad, if earnings are already bad relative to history, why wouldn't I think that the lows aren't in? Then you have this don't fight the Fed narrative that has always existed as long as Mike and I have been doing this and even longer. You don't fight the Fed. And that's currently what the stock market is doing. It's fighting the Fed. Okay. And you don't fight the Fed. All right. Now, many people believe a recession is coming, and you can see this in the bond market, and they think the recession is going to do for the inflation problem what the Fed is trying to do. Here's why I don't think that's going to work because of the jobs market. The jobs market is still remarkably strong. So, what has to happen for inflation to come down like the bond market is predicting? You have to have more job losses than we've already had. All right. Lastly, if I'm wrong about the more job losses, why would the Fed cut rates? Why would they? All we've talked about is normalizing rates at some point. They got to normalize rates, normalize rates. That means higher for longer on rates. And do you know that there is a full 30% of the S&P 500 CEOs that are too young to ever have existed as a C-suite occupant during a time where money actually costs something, where there was actually a cost to money, which is what we have when we have 4.25%, 4.5%, and 5% Fed funds rates. We have a cost to money.
Hey,
So
hey, Bob.
hopefully that's clear. Yes, sir.
Real quick, even the CEOs and CFOs, even, because you have a lot of them who have not been around since the money constantly. How many people on Wall Street have not been around since,
Right. Wall Street, and then Mike mentioned the CFOs. I bet you, I wasn't able to find it, but I bet you the percentage is even higher in tech. It's got to be way higher in tech. So anyway, that's my whole thesis, Paul. Now, it doesn't mean that I'm right. But you asked me, how could I think that? That's how I think that.
And, I'll say the probabilities are that we will hit new lows. Could probability, if we continue to rally and pass key points, could the probability shift? Yes. But until that,
I'm sorry, Mike, can you put up a weekly ES chart?
Right here.
And just draw the trend line from the high on January 3rd to the high on December 12th. You could see it with your eyes what trend line.
What, this one here?
Yeah.
This January 3rd from last year. There you go.
Yeah. Tell me this is to somebody who's looking at this just insanely bullish market. Just from this trend line. Well, we haven't broken it. Michael Antonelli on Twitter drew one without including that spike high from December 12th and said we've broken out of it. I disagree. I think we could reach that high, but then we'll likely test the trend line and break it to the downside. That's my view. And this is a weekly chart, so you got to give it time to actually happen. But that's my view.
Also, here's the other thing. Earnings per share is coming down, but look at right now. When you have market troughs, you're generally not pricing. We're already paying up. The market's already paying up over 21 times earnings again.
All right.
As I've talked about price to perfection, they're already paying exorbitant amounts for the current earnings. They're saying, hey, I'm willing to buy these stocks, and I'm willing to pay up. Fine. If we were in a growth cycle, that's one thing. When do you pay more for stuff when it's going to keep expanding? Companies aren't yet even slashing stuff that much, and they're going to have to. They've been slowly dialing it down. And also, I'll cite Tesla as an example. The analysts and everything they ripped their projected earnings completely apart, and then they had a beat.
Yep.
Okay, and they literally ripped them apart the last 2 weeks, and then they beat that. It was like a pole vaulter taking the bar from 16 feet down to 6 feet, and then he jumps 7 feet. It's like, okay, what a beat. And it's like, And I'm not just picking on Tesla. This is happening all over the place, and some companies are still missing those. So, anything can happen. But my frustration is that everybody's still, or so many people, I'm not just talking about this live stream, are still trying. There's trades. We're in a trading market. We're not in a just back up the truck and pack it in. There could be probabilities that pack in your let's just load up our portfolios and walk away for 5 years. Now, are there going to be bullish trades? Yes. Are there going to be bearish trades? Yes. And that's why I think for the next few years, the best thing you could do is learn and I'm not talking day trade. I'm learning to manage, some multi-day and multi-week trading strategies, so you can be nimble And when we will get 20% rallies, and we will get 20-30% pullbacks. So, and we could end up going a whole lot of nowhere. Just look at the look at the S&P. I mean, we're still trading at levels back from last May.
Right. We haven't even gotten above the midpoint of last year.
No. So
Let me ask you something, Mike. And then this is, I don't know if there's any more questions for me because I'm sort of running out of time. I know you wanted to keep this short, but can you tell me if the weekly crude oil contract, if that's a legitimate double bottom or not? Because somebody on here said say no to $85 crude, and I very quickly measured it with a target of about 87 or so.
we have a daily double.
Okay.
It's not yet triggered on the weekly, but it's valid weekly, it's valid daily. The daily was triggered. I've covered that multiple times. So
what's the target on that?
87.21 is the first target, 89.90 area, and then 92.92. And my final target's actually just in front of that because the 200's right in front of that target.
Yeah, so I mentioned today on TD Ameritrade that I liked crude oil to 87, but I wasn't ready to trade it yet.
So yeah, I mean 87 is the first target. So far we've come out of overbought conditions, and we have daily cycles getting closer to bottom, and all this has been we had a potential double top that turned into a triple. All this has done is a sideways correction. So it's burning off its overbought. That's, again, there's no guarantee. It could break down tomorrow. But so far, it's holding that really nice break above recent swing highs and then pulling back and correcting sideways and letting these moving averages catch up. So that's where we sit. Paul says, thanks, Bob.
Yep. Paul's a good guy. It's not like it's Coco.
It's okay. So I think that's about it.
Okay. If there's anything else from you guys that I missed, throw it in the Discord.
Pavneet, real quick. Bob, do you think the market is intelligent enough that they would pull out profits before Q1 earnings rug pull? If not, what would they be hoping for? Say S&P at 4,300?
I think it's markets being intelligent. You know, you got to remember, guys, when we use the term the market, it's just the amalgamation of mob rule, right? So while the market is never wrong, it doesn't mean the market is going to do the quote unquote right thing as per data or economics at the time when we say that it should, right? So you got to be careful about wondering when the market is going to take profits and sell off. I would guess there would be some people that would do that. Yes, Pavneet, but I don't know if the overall market collapses. That's why I keep saying that I expect those October lows to be broken sometime late Q1, early Q2.
All right. That's where we sit. Coco, Bob, what if earnings comes mixed? Which companies affect the market if they miss?
Well, we're only about a third in, Coco, and most of the companies have technically missed. Doesn't really matter. I mean, if they're reporting earnings based on non-GAAP, and if you take Tesla based on non-GAAP, okay, it's difficult to predict which companies will actually react negatively to earnings, which is why just go back to price action when it's earnings season. So I don't really have an answer for you, buddy.
Yep. All right. We'll let you go then because I got to.
Yeah, I want to say one thing real quick. For those of you that don't watch the podcast yet, we have Dr. Robert Malone tomorrow, who is he was one of the co-inventors of the mRNA vaccines and one of the first people to get banned during all the COVID vaccination stuff. So I don't know why we have him, to be honest. I guess because he said yes. And, you know, I don't know how we're going to weave it into economics, but I think we are going to weave it into economics and markets. But if you haven't subscribed to this channel yet, you should subscribe to it so that you get notified when Mike posts the podcast on here. or also you could check it out on Spotify too. It's the free version of Spotify, but just giving you guys a heads up on that. All right. I'm heading out.
We will be
Thanks,
looking
guys.
forward to that one, Bob.
All right, buddy.
All right, I'll talk to you. Thanks for being on here. If you
See
see
ya.
anything this morning or tomorrow morning, are you available to jump on quick after the open?
Yes, I am.
If anything, you see anything with PCE or something jumps out at you, if you could take 5 minutes to jump on for everybody, that would be really
Yep.
appreciated.
Yeah, just remind me that it's time, Mike.
Okay, I'll text you.
All right, guys.
All
Cheers,
right,
everybody.
bye. Just me, so everyone else can leave. So again, I'm going to go through this stuff really quick. I can't stay extended. I saw a couple stock requests. If you have them, put them in really quick. By the way, here's again why we use the levels. I'm just going to go through this. The key support is now coming in at 40.35. Below that, it's still 39.70. If we have numbers the market doesn't like tomorrow, I'd be watching this 40.30, 40.35 pullback area. If they do like the numbers, the next major harmonic is 40.97 to 40.99, so 4100, then 41.31. It's in trailing mode. Cycles are still moving up to the top. We're getting back to overbought conditions. Weekly's getting up to the top again. So I am not we could do anything tomorrow with the PCE numbers. I'll react if we get a pattern overnight, but there's no major topping pattern even with a pullback yet formed. But I'm prepping more so one to keep my eyes out for it. So those are the levels to the upside. Nasdaq reconnected. Oh, let me jump back here. I want to show something intraday. Also, why we use the harmonic levels, because people say you just throw levels up there that start studying because you'll see them. No, are they guaranteed? But little snap up at the open, reacting to that first level, pulling back. Here, you have the other key levels on the charts. Then rallying back through, little pause at that first area again, coming up, and you can go back and look at the stuff from this morning. Those are the levels I put up there, 40.76. Again, doesn't have to be exact, not trying to call every move, trying to give action areas where we could get reactions. Next minor level is 40.82. That's why you should study the stuff. Nasdaq, again, closing above the 200, nearly within shooting distance of the 87.5 to complete that area. We'll be watching for potential topping between 12.140 and 12.340 roughly. Okay, so that's where we stand there. The support, major supports all the way back at 11.619. The minor support is coming in roughly 11.970. Dow watching for the return with the close above the 62.5 to 34,300 area. Key support coming in around 33,800. Russell, I saw somebody was trading a 5-minute double on the Russell. Yes, the major double top is still in play. The key levels, and by the way, this is what Sterling, did the cup and handle trigger? No, we did not get the close. We're still waiting for that. So, no trigger. Again, you can call the pattern at this point completely confirmed. Why? You have a solidified handle. You have the cup. It's more like a sippy cup if you take the little double dip. So we got the sippy cup and handle. Nothing's really changed with the levels. Nothing's really changed with the notes. Still watching here for the potential 4-hour double. That would be the only thing that puts me short-term bullish, very short-term bullish. Dollar index still trying to hold these key lows. This is going to be interesting once it really gets out of this range. VIX, nothing going on there. Crude, Already talked about that. Sideways moves at the most recent highs with a double top confirmed and triggered. So the probabilities have shifted to higher prices from the triggered. And so far, we were watching that potential double, never triggered, turned into a triple in a sideways correction. Again, natty gas continuing with a little spike down today, but no solid bottoming pattern just yet. Gold pulling into the rotation zone and still closing above it, so it's still in trailing mode. Japanese yen bonds, 10-year bonds, still closing up, but not yet to that 50 level where we could see some intervention. And the no breakdown yet. So still 129 is key for the rollover. Or if we break out above 131, then I'll watch for an even continued rally before another rollover play. Euro, flat, hugging the rotation zone. Nothing going on there. Pound, not much going on here. No double because it's now a triple. Bitcoin has gone flat with the sideways correction still. Tesla up close to 11%. We're clearly into where do we sit right here? 160. Let me hear, we're right around here, still on a continued rally. About 167, 168 is a major area. And then if you get through there, the next major area is 180. Other than that, no topping pattern yet. However, if we start breaking below today's low, we'll start using the gap harmonics for pullback levels. What else did we have? We had Intel, which was a miss. Come on, don't freeze on me now. Intel miss. We have the double. So far after hours, it looks like it's going to trigger. These levels have been on, so guess what? Not looking to really do anything. It's still trading around a core position. Lighten up in here. Wait for the drop. Now we could easily get the drop back to 26 or even below. Even below. So, being very patient. There's no signs to add right now. There's nothing to add right now. It's waiting for the drop. So if you were looking, hey, I think Intel ran away from me. Just remember, like, ran away, drop. Ran away, drop. This drop, if it completes the double, will take the weekly double off the table. Does it change that I like to trade it around the core position for dividend play and everything else? The only thing that would make me take it off my radar screen is if Intel said, we're no longer paying a dividend or something. We're massively slashing their dividend. Then it would no longer fall in the trade around core position bucket. Visa was a beat. I know Sterling put in the results. Thank you, Sterling. Beat, slight gap up. So that's where we sit with that. NIO. The only thing really is if it starts breaking back down, you have a gap fill. Not really a major concern. There's not a great pattern. It's just in a corrective sideways pattern. On any rallies, you've got key overhead resistance around 13 to 1350. Support doesn't come in for me down until about $9.50 to $10. Right now, it's in no man's land. If you're looking for something short term, as long as it holds above this little ridge here, you see this little breakout ridge? You can lean on short-term potential bullish trades. However, you start getting the close below that, and then especially back below the rotation zone, I'd be letting this thing pull back. Earnings are not until March. So Right now, just caught in a huge channel and cannot even get above the weekly rotation zone yet. I know we had PayPal. PayPal, interesting enough. Let me flip these around at this point. Because it completed that pattern to the downside. The longer term stuff, if it can really get a move on above 81.10 roughly, you're into a clear path move. The next target would be 84.71 to the upside. And then the next major target, 89.29 in front of the end of the clear path move. The only thing that really gets concerning is if you start breaking back down. I mean, the warning sign would be if you start breaking back down below about 75. The earlier warning sign would be, let's raise that to about 76 on a closing basis. If you start closing back below 76, you got gaps left behind, and it's going to turn into a rollover play. Keep in mind, right in front of that 50, I'd still be utilizing that 50 as a key level, but do not ignore the 200 at least for a stop reduction right in front of that level. There is your PayPal. Every day I get closer and closer to just putting my money in bonds. I've said, you know, short-term bills even. Short-term bills, park some money in there if you're waiting for a longer-term bottom. You know, I didn't look at them in the last couple days, but I know earlier when I was doing stuff with it, it was I got 4.7s on them. Now that's an annualized rate. But you know, you can park money in there while you're waiting for good setups. It's not crap because it's pretty much risk free unless the government defaults. And if the government defaults, you know what, that's going to rip apart the stock market too. So you don't just say, "Oh crap, they're going to default on my bonds." You know, don't want to be a lot touching stocks either at that point. So that's where we sit. Yes, I asked you to come back after the close, which you did. BNGO. Not. I think you're still hoping, besides just fluctuation moves, I still think you're hoping for a miracle here. It did complete the 87.5 from the run up to run down. It did complete that. I will give it that. But if you're looking for a bullish play, but I think you want it to rally up a lot. The only little bullish play would be a back above $2 for a potential run to about 221. Other than that, I would keep an eye if it does break back down below 168. You still got a potential. Now, this could turn into a triple, but you do have a potential double still there that could take it back to 140. So you have a breakout and breakdown play. But your breakout play would only really target 221. So thank you for being here, Dark Screen Sleep. Is PCE one of those that you should know? Not that I can recall. I got to jump through over some of these. There's a lot of rules behind it, Charles. if you get a clear rotation back down, a clear rotation, okay, not just a, it can still be, and if you're in doubt, look at the higher time frame. If it's still valid on a higher time frame, it can still be traded. However, it has to be traded on the higher time frame then if you're trying to learn the rules. You want a clear rotation back down. All right. That's the best way I can put it just from a verbal standpoint. Was just so. You want a, you know, I'll have to find an example. But I mean, I can show you crude. Let me cut down to a, like, it's easier to see here. Come on. So you see double top right here. And then this is another clear rotation. A clear rotation exceeding your key harmonics. So you see how it's boom, another clear rotation. And then if I look even on, all right, can I go to the daily? Well, look at the daily. 1, 2, clear rotation, 3. No. You see that? That's the best way if you're trying from a visual standpoint. And then if you go, oh, can I trade it on the weekly? You can't even see it on the weekly. And I'm not talking about the double bottom. I'm talking about that little double top to turn into a triple. So it's not on the weekly, so you can't trade it on the weekly. On the daily, you can count 3 rotations up, and it's pretty clear, triple top. And it's really easy to see on the 4 hour. If my, I don't know on the 4 hour with the clear rotation. This wouldn't have invalidated. See this to this? See this? Why? Because that was still one side of a top. This creates, look, you can almost separate it into double top from here to here, here to here, double top. And you don't have enough separation between tops. So now it would be double, double, so it's a triple. If that helps you see it better. Hello, Amit. What is that? City Guns. Then I'm going to wrap it up. GDX. And the gold miners with gold rallying have been just in. It's going to trade very similar to gold. So this is also in trailing mode. All right. Your key support level is back at about 30 bucks on any pullback. Watch the weekly rotation zone. Any pullback to a weekly is still fine. This is not a double top, by the way. So if you're trailing, a key level I would be utilizing is on a close below about 31.20. Why? That would take it below the rotation zone and below this little pivot point, and I'd watch then really for a pullback to 29.90 to 30 bucks. Other than that, and that would be for another potential rotation buy entry. Your key level you want, again, for continued plays higher, the one I'm watching for is 34.07 on a closing basis, especially a weekly closing basis. Why? Above there, then it's your next target is 36.58 and 39.09. There you go, City Guns. All right, that helps. I was just trying not to get shaken out by 1 bar spikes. Why does Mikey Numbers is here? Why does it feel NATO is modern day Napoleon? I don't know. Mike, today reverse harmonics on Spider 4 hour helped me figure out the exact high of the day target. It's magic. It's tested out really, really good. Again, nothing I teach is there's no perfection, but learn these things. I can tell you that people have learned to use these tools really well to figure out their roadmap. Is it always going to call a high or a low? No, nothing does. But you can get consistent with them and really, just like I went through on gold, GDX. We got key levels. We can utilize the harmonics. You can utilize your expansions. You know, I'm just showing, you know, you utilize the expansions like this. Remember key swing low back in September, pausing bar high, and this is on the weekly. Take a look. I just put these up there. So look at this. You got a cluster right there, which was a dead close on the weekly. So you came up, breakout from here, pause, boom. At least a stop reduction there. Fantastic. Get to raise my stops. We got what happened here? We got above a swing high, based here, formed another base, sideways correction, rising rotation zone, breakout, stop reduction. What's the next target? Right here. Look at this. Close, pull back. It's still trading right in this area. So this, if you're a long-term bull, this can be another stop reduction. If you're short-term, hey, I'm watching for a rollover. Maybe you take something off the table and trail with the rest. Again, I can't tell you your exact way you're going to utilize it because depending on if you're a longer or shorter term trader, you could trade the same levels with slightly different strategies. Next target though, 3407. Once we get a pausing bar here, we technically have this one. I'd watch for a little stronger one. Until then, you want an idea. Look at this. If we use this, because this bar didn't touch this, so it's a technical pausing bar. But where does that take our next longer term harmonics? Well, what do you got? Cluster. Can't make this up. Then 35.53, then 36.58. So you have a roadmap to follow. All right, ASXC. Joe, the market maker. Are you really a market maker, Joe? Yeah, I was this. Reverse harmonics. Boom to boom. Why do you think I did that? I wanted to see where the thing was. Look at that. Right there. What's this look like it's triggering? And I would use conservative targets on this. Those aren't the conservative targets. There you go. So that does not mean it has to go here in a straight line. I don't know if you regularly watch the channel, but this does not mean it has to go here in a straight line. This is a weekly pattern. I'm also going to put up what invalidates it because nothing is guaranteed. So I'm going to, since I don't know if you watch this channel all the time, I appreciate if you would. Back below 0.4698. On a closing basis invalidates it. So see, you can have a decent pullback. Now, where I'd be watching for on any pullback, we use the candle bodies between the peaks. So 68 cents. What are your targets? Okay, so that's the area that's still fine with a pullback. You can also use this 1 hour rotation zone. See how this broke? Catch sideways move. This was still a sideways correction with rotation zone catching up. Breakout. Does that mean it can't return here? If you're watching the short term, I'd be watching the daily rotation zone because it's getting overextended from the weekly. However, also at that key breakout level is the hooking up 50. What are your targets? Now I'll get to that. A $1, 111, 122. And all that, you're also above this prior key. This was key resistance it broke out from, and it's breaking out from there again. Nothing I trade falls in my penny stock category, but that's the technical analysis on it. Just be careful in the short term because it's very overbought. Now this looks like something that can get even more overbought, and cycles getting to the top. So, you remember, penny stock traded accordingly. But that's how you unfold the analysis on it. If you're still here, Joe. Doesn't matter if you're not, because I think people can see how you use the key levels. With that, I'm going to wrap it up. Let's see. I think I will use the retracements as key levels for invalidation 62, mainly more detailed than waiting for it to reach lows. All right, Joe, the market maker. Again, let me know if you're going to subscribe to the channel. Hopefully you do. You are welcome, Charles. You are welcome. Thank you for being here, everybody. Thank you for being here, Mikey Numbers. City Guns, if you like what we do, consider subscribing. Just trying to help as many people out as possible. Sterling, as always, thank you for being here and putting up all the information. I'm sorry I could not get to everybody's comments tonight. I need to run right now. We'll be back. Hopefully Bob can jump on after the PCE numbers tomorrow. I will be on at the regular time. So I will see everybody back at 8 a.m. Central and see if there's any fantastic setups to finish out the week. Have a wonderful evening, and thank you for subscribing, Joe. Cheers, Jacob. Thank you for everybody being here. See you tomorrow morning.